United, ready to fly. Batman and Robin, we took to the streets, chasing the shadows where justice meets. From Calgary to Ottawa, our fight never fades, taking down the villains in our own crusades. Whose street? Our street. Nazi scum off our streets. Southern Ontario, our battleground. Protests and rallies, the truth we found. Politicians, Antifa, our foes in the night. Gotham spirit in our hearts, the fight. Facing the darkness, we stood tall. In the name of justice, answering the call. With fire in our hearts, we took them down. In the streets of Canada, we wore the crown. Federal elections, the stakes were high. David Lynn's arrest, preaching in the sky. Church Street in the GTA, the scene was...
Hey, what's up, Canada and beyond? Welcome back, boys and girls, ladies and gentlemen, grannies and gators, friends, family, prisoners, patriots, and hostages too. Looks like the gremlins are showing up a little bit earlier tonight, but it's Friday. That means we are back with our resident precious metal whisperer, Bryce, here. In just a minute, we'll bring him on, and I'm sure he's going to give it all to us with like a fire hose. And I'm sure you guys expect no less. But before we get started, let me remind everybody to get plugged in over on Substack, whatsupcanada.substack.com. Everything that we cover here will eventually make it over to Substack. Get plugged in on the only piece of digital real estate I actually own, whatsupcanada.org. Interesting thing about that, had some conversations about that today. People were asking me, how is it that your website doesn't get crushed? And I said, because I own it. And I have learned from and all of those things. But this is where you can go to get plugged in on everything. The Substack, you can get plugged in with the Switch with Wayne Army. You can get plugged in over at New World Precious Metals with Bryce. You can book an appointment there. And that is what you guys are seeing right above me for a QR code. If you just click your picture, click your camera open on that, it will open up to exactly this page, and you can set up your appointment with Bryce, our resident precious metals whisperer. Welcome back, Bryce.
It's good to be back, man. It was a great trip to Regina. It was a great conference. Great to see you again. Great to see some of the other speakers. Pity that Tiana had the problem that she did, but it was still good, and I really enjoyed meeting some of the people and some of the watchers. So for everybody that came and chatted to me, good to meet you.
Yeah, you know, when I think back to a bunch of the events that I've been to and whatnot, I think that one to me was the most intimate, personable, genuine, just grassroots one I think that I've attended so far yet. So nothing but props to the folks that put that together and looked after us so well over there. I cannot wait for them to do it again. But today is Halloween, so for anybody that chooses to celebrate that stuff, happy Hallowed Eve. To me, it's kind of in alignment with the rest of the nightmare that we're kind of living through here right now. Most people, when they ask me how you do, and I'll tell them I'm living the dream. It's just, not sure if it's Castro's, Mao's, Stalin's, Pol Pot's, whatever the case might be. Carney, I think, is in the Liberal Party going to go down in the top 5 of psychopaths, if not the number 1 psychopaths in Western civilization has ever seen. But I know that you're going to have a bunch to share with us tonight, Bryce. Where do we start even?
Well, let's start with the most important and most obvious. So I'm sure everybody that has gold and silver, and even some of the people that haven't, probably saw in the mainstream media, or at least somebody mentioned that there was a big pullback in gold and silver. Well, let me actually show you what that looks like, because it's fairly important to understand what happened, how much it happened, and why it happened. So I'm going to start there. Actually, I'm going to circle back to this, actually. So I'm going to show everybody what happened, and then I'm going to come back to it in a little bit, because I want to show some other things that lead into why this is happening. Okay.
Right.
So let's do this here. So this, I'm going to start with silver first, because I'm a mainly silver guy. I'll blow that up a little bit. Yeah, a little bit too much. There we go. So the high that we hit last week was $53. Now, there's a couple things to understand with this, right? So this is a massive incline. So you can see, from this year, basically, we're down at $30, right? So we're basically at 50% up from halfway through the year. Like, so in the last 6 months, silver's been basically up about 50% plus, or 60%, whatever the actual number is, for people that want to throw me a number in the chat. So anyways, so like the level from here to where it currently is still up more than 50%, even though it's come down about 10% from this peak from the top here. Now, this dip here also coincides with, if I can find this, the other one, which is gold. And I'm going to show you the same thing in gold. If this ad blocker gets out of here, get out of here. So this, get out of here. This guy. Bro, get out of here, man. Sorry, wasn't doing this before. Okay, so go in here. So same thing with gold. So you see basically the same time. Oh my God, this thing never's done this before. I guess they want us. But anyway, so we hit basically a high of like almost $4,400 for US for gold. Right now, it's back down to about 4,000. And the people in the industry, the people that follow this, we really haven't seen a lot of pullback. Right, so there's been slight declines of this. It's been, a high, it comes back down a little bit, but it's steadily has been going up. And since
There really isn't a lot of difference between the charts, even though they're completely different commodities.
Yes, exactly. And a lot of this is because these are monetary metals. Like, precious metals are very, very unique, because there's multi-use, and especially for gold, like 90% of gold goes into bullion and stays in somebody's hands at a vault somewhere, and is used as an international trading commodity for the purposes of monetization, right? And one of the big things that's happening, which is one of the things I was going to say later, but say it now anyway, is we're really seeing the remonetization of gold, right? Up until recently, you didn't really, as a person, or even international trade since World War II, everything was US dollars, because the US was the hegemon, right? So it was US treasuries, US dollars, cash, right? This is what everybody used. We didn't really use gold as much for international transactions, because US dollars was more efficient, right? But now, because the trust in the US dollar and the US government, rightfully so in some cases, is declining, well, we're seeing a move back to precious metals as a unit of currency, like a unit of transaction. And this is why China especially, but all nations are really, ramping up their purchase of gold and silver, up to and including the central banks. Central banks are now buying silver as well. Usually they only buy gold, but now they're buying silver as well. So we're seeing this, massive sea change in the way the economy operates and how it's financialized, and all of these different things are leading to people coming to the conclusion, both at a super high level, at a nation state, central bank level, I need gold in my portfolio. And now there's big players like, Bank of America and bond traders and all sorts of different people saying, hey, you should have 25% of your net portfolio in gold. Like, that is a massive change, right? And so one of the things that we, so Andy Sheckman is one of the main people that I follow, because he has really inside track, and he kind of shine some light on what happened, right? So basically what happened, more or less, is that there's a bunch of different markets that trade commodities. So there's New York, there's London, and there's Shanghai. So those are the three main ones. So when one closes, the other one opens. So typically when, at the end of the week, when the markets close at 5 p.m. Eastern time, that's the final market bell for the week, right? So that's the last to close, and it's also the last to open. So like Sunday night, the markets are actually open in Shanghai because they're ahead. So the way that it works, right, is that there's certain times of the day that there's less liquidity, less trading, less stuff happening because some people, like the East Coast, are asleep. And effectively, what happened at this is like there was some big players. We don't know who this is, but they just dumped a whole bunch of paper onto the market. And when they did that, right after that, there was a whole bunch of people, we don't know who they are, that also locked in a whole bunch of futures for deliveries. So there was a bunch of people that sold a bunch of paper, and then a whole bunch of other people, could be the same people, could be different people, we don't know, that also said, give me all you got and I'll stand for delivery, right? So there is this kind of battle that's going back and forth between what's happening with the paper market and what's happening with the physical market. And as I said in my presentation, the ultimate arbiter of price is supply and demand, and supply has skyrocketed. So if you looked at this and said, oh, I missed the boat, and oh, it's too late now, and we reached the peak, yeah, not even close. Like, so I look at what the trajectory and the momentum is, how fast we're going in that direction. There is literally nothing that has changed in this trajectory or the momentum behind it. So, sky's the limit kind of deal. But what I'm trying to get across here is that there's large people with large portfolios, people with large positions that were saying something to the effect of, we have to do something, and they did this for a purpose. It wasn't like they were like, oh, we're just going to take some profits, which is what typically happens. So all of this other examples down here, there's all people taking profits because they're minor things that are happening. This is typical of markets, right? There's always buyers, there's always sellers. But this is something targeted that happened. So there was a reason behind this. We don't know what it is, but this means that there is things happening that are very, very significant. Is kind of what the result of this. What it means is there's stuff happening.
So a couple of things that you said there that really struck me. One is that people are actually recommending that people hold gold and silver in their portfolio. That's a little odd. Most of the folks that I talk to, their financial advisors are telling them, no, don't do it. They've got their this, that, and the other thing. So I find that a little bit strange. But I'm wondering if this little drop or little drip, whatever you want to call it, kind of coincides with all of the billions and trillions of dollars of trade deals that America has just signed in the last
you're cutting out a bit.
couple of days. If that couldn't, maybe we're in kind of a storm and a blizzard here, so it's been kind of shitty all day. So there's not much I can do about it here. That and Gremlins have really been in love with this channel all week. But when good stuff happens, people tend to let a little bit go and make a little profit, and we see a dip. But by today, when the shit is hitting the fan again, and now Russia's even using the words World War III, that's going to create an even bigger boost after this little dip, because now it's going to be just that much more affordable than it was last week for people to invest. Is the market that fickle that it reacts in the precious metals markets by current events and world events by the day?
Yes and no. So like I'll give you a couple of examples to flesh that idea out. So yes, in the sense that world events definitely do have an effect on the precious metals market, obviously, because it's a safe haven asset that people move into, right? So when 2001 happened, gold spiked 20% or whatever over the space of a week. So like it's very uncommon to see a drop in the precious metals prices like this. So somebody did some analysis, and something of this level has only happened like I think 34 times in the last 250,000 trading days, going all the way back to 1913 or something. So this is a extremely rare instance, like 0.01% of the time something like this happens or something like that. So this is very rare. And like I was saying before, this is somebody did this intentionally. It wasn't like, oh, we're just taking profits. That's not how you would take profits off of your position if that was the goal. So this was targeted something for a reason. We don't know what it is or who it was, but it was definitely for a reason. We don't know what the reason is, right? And so, yes, things can have an effect on that. So, like, here, I'll give you another really good example, right? The subprime mortgage crisis that happened in 2007, right? That was front loaded. Like, there's a whole movie about it called The Big Short. So that, like, people were betting on this happening, but it didn't happen until well after that situation had developed, right? And so the real trigger for all of that stuff was like Goldman Sachs dropped like 20% in a day or some ridiculous number. And when people saw that, that's when everybody started panic selling, right? That was the trigger. So the actual thing that causes the drop isn't necessarily the thing that people think it is, right? Is kind of what I'm saying. Then that's where the no part is that you don't really know what's going to be the trigger, but it's the public perception, because again, it's trajectory and momentum, right? So the whole trajectory itself is provided by momentum going up or down. So when that momentum changes because of somebody seeing something on the news and saying, "Oh, well, I don't trust the markets anymore, so now I'm going to sell." Well, now you have momentum going in the other direction, right? And so you have these competing directions that eventually one wins over the other. So now you could be going sideways, right? And so when people are like, "Well, I'm sell everything. I don't like the situation anymore. I just want my money." Well, now you have huge momentum going in the other direction, right? So this whole system, if you want to think of it like that, is really dependent on public perception of what's going to happen in the future, right? Because the whole idea of an investment is I'm going to give you money today for something that I think is going to improve or worth more sometime in the future, right? But if I think that this thing, whatever it is, like real estate as an example, is going to be worth less in the future, well, I'm going to sell it now. And this is one of the things that's happening in gold and silver, and there's actually a word for this which I looked up today because it's come. So this is a word that everybody wants to learn. It's called backwardation. Now, I've never heard about this before until it became colloquial in the last couple of weeks because of all of the insanity in the precious metals market. Sorry.
Come again on that? You glitched right as you were mentioning the word.
Oh, backwardation. Backwardation.
Backward. That sounds like something a liberal would come up with.
Well, so this is the meaning of the word, right? So backwardation is a market condition where the current spot price, so the current price for a commodity, is higher than its future price in the futures market. So futures are what is the price going to be in the future is effectively what that is. But you can also take delivery with futures. This is why it's being used as sort of a delivery mechanism, because you're basically taking out. I don't even know really how to explain this really well, but you're basically taking out you're putting money in to say this commodity is going to be worth more or less in the future, then pay me money based on what it's going to be in the future. Is a very rough simplification of it. I don't want to get, that's like mechanics of the markets, probably beyond the scope of this discussion. However, it's a price setting mechanism as well, and this suggests the high current demand or a temporary shortage, with the expectation that prices will fall in the future. For example, a commodity shortage might cause its current price to surge, while future supply is expected to normalize. So all this to say that the people are taking delivery now because they don't trust the delivery and the availability, right? So when I did my presentation at Regina conference, one of the things that I said was there's shortages all over the place. So there's people lining up in Australia. I just had a friend yesterday come from Australia. He was talking about this. I didn't even prompt him. He was telling me about this. He was like, yeah, there's shortages all over Australia. The mint, the Royal Canadian Mint, the Perth Mint stopped minting. There was a total breakdown of the capital chains for the leasing and movement of precious metals. Like the supply is going down, but demand is not, right? So this is why all of this noise that's happening with price, and Andy Schekman even says this, is that price is the easiest manipulation because it changes your perception of whether something is valuable or not, right? Oh, it's $4,000 gold right now. Well, it's overvalued now. Well, that's only because you've only seen it at 2. Is it overvalued right now? If it's going to be at $20,000 in the future, no, it's a great deal right now, right? But you don't know, you don't have that perception of what it's going to be because that's off in the distance somewhere, right? And so where I'm going with this, and I'll kind of end with this, is that the amount of demand that is happening in precious metals right now is skyrocketing across almost everywhere, the entire planet. They're buying up everything that they get their hands on, right? And so I really caution or recommend, we're for this, counsel people, I guess, in a sense, to have some precious metals in your portfolio, because at a certain point there's not going to be enough for anybody because everything is going to be bought up, and that's when people are going to start selling, maybe. But even then, you don't want to be selling at the high. You want to be selling, but you want to be buying at the low, right? You want to be selling at the high, not buying at the high.
Well, a couple of great comments here, Don Record Man. What are the odds BlackRock was involved?
Probably like 8%.
But this is what I wanted to get to. This comment from Arnie: physical silver provides tangible security, but it's harder to acquire right now due to shortages.
Exactly, and this is because of the capital chain breakdown.
Right. But the shortages, shouldn't that be driving the price up through the roof?
Well, exactly, right. And this is what I was talking about earlier, is the battle between physical delivery and the paper markets, right? The paper markets are the difference here, right? Like I've said this before, like the paper markets are sold at like 400 to 1 paper ounces to real ounces. So what would happen to real demand if all of that paper money in paper ounces was put into physical, right? Is there enough for 400 to 1 delivery? No, there ain't.
Right. Comment from Denny Boy Bryce, and some are trying to drive the price down to discourage new investors.
Well, this is one of the other things, right? If you're in the paper market, so let's look at SLV for a second, which is the ETF for silver, right? If you have a stop loss, right? If it hits a certain level, you automatically sell. Well, they can see that. They can see where those stop losses are because it's in the system, right? And there's supposed to be a process where we have free markets, right? Where the thing just does whatever it does. Well, there's been multiple banks that have been charged and fined for manipulating the price of silver and gold, for that matter. But where I'm going with this is that supply and demand is the ultimate arbiter of price, right? And so there's this battle happening between the manipulations of the paper market and what's actually happening with supply and demand. Well, if you want something, I want something, everybody else around the block wants something, but there's only 5 of them in the block radius. Well, you're either going to get what you get, first come, first serve, or you're going to start bidding up whatever is left. So if I buy 2 and you buy 1 and there's only 2 left, well, you got a bidding war for whatever's left, right? And this is what happens with prices when there's a supply shortage. So this is literally another gold rush and silver rush, because at some point the powers that be are going to realize, and probably already have to some degree, that I have to get as much as I can before there isn't any left.
That kind of brings up Diane's comment here. They know that we know what we shouldn't know.
That's a good way to put that. And this is probably one of the reasons that they did this, right? Like I said, we don't know exactly why or who did this, but there's been a lot of people starting to talk about gold. It's getting more mainstream now, and maybe they're still trying to cover their positions. Like, we don't actually know how much the Trump administration and the U.S. government is actually trying to recapitalize on gold. They're talking about a gold-backed treasury. They would need an absolute ludicrous amount of gold to do that. So China's been doing this for years. They've been preparing this, right? And if the decision has been made for Western society to be on the decline, by the powers that be, well, what is their solution to do that, to take care of their own financial position? Gold and silver.
Right.
So
Arnie says, due to high demand, some orders may experience extended processing time, 1 to 2 weeks.
Yes, I was going to comment on that, actually. So thank you for bringing that up. So I just did an order yesterday for delivery, for a retail order for somebody, and it was $20,000-$30,000, something like that. And that's not overall a really large order. But usually what I get people is these, which is if you can see that, the silver maple leafs. This is the majority of what I recommend people buy, because it's sovereign. It has an actual face value. I don't know if you can see that.
Yeah.
Not really clear, but it's on the there we go, $5. So that is face value coin, right? And so this is a sovereign mint, has an actual face value on it. And so what I typically recommend people do is you get a bunch of these. Yeah, exactly. You got one too. That was 2021. So you get a bunch of those. You get some sheets of 1 gram 1 gram silver bars, and then you're good for doing transactions with other people, right? Because this is kind of the unit of measurement, right? And if you have all of this, right? Generally, I've never had a delay. I can just order whatever I want and it sends out. We work with like one of the largest providers in North America, right? So if they don't have it, there's a shortage, right? And they're now like because of the Royal Canadian Mint's pause on minting, and Perth did the same thing because of the capital chain breaking down last week. So now there is a delay until sometime into December for some of the things and into November for some other things. So this is what I'm saying is that like if you want it, well, TikTok.
Right. So some more great comments, lots of comments again here. The problem is metals are valued with fiat, which is printed money with no backing, isn't it?
Yeah, that's one of the considerations. So one of the ways that Andy Sheckman describes this, and I'll actually post the video for you to share with everybody. If you could put it down below this video, I think everybody would benefit watching this video because Andy Sheckman is one of the smartest people in the business. And there's also another guy named Rick Rule, also one of the smartest people in the business. Rick Rule talked about gold going up by another 300% from where it is now, and he talked about 600% from where it is now, right? I'm a firm believer that something in that neighborhood is going to happen because of all this momentum and trajectory. But where I'm going with this and why this is important is he talks about if you measure everything in gold, everything has actually fallen in price because the money that we're measuring it in has gone down in value. So it takes more dollars to buy all this stuff. That's effectively what inflation is, right? And so the protecting your purchasing power aspect of gold and silver, right? This is what empires have always used. Like, hey, I'll give you a gold. Well, if it's half tungsten or something, well, it's not as valuable as 100% gold, right? That's what old printing used to be. So they would take nickel and mix it with silver, so it was not real and not full real currency. This is the debasement of the currency, and this happens near the tail end of when empires fall. This happened to the Soviet Union. This happened to Britain. This happened to every empire throughout the history. Not a lot of people know this, but this is actually happening in China too, because they're printing well beyond their means, but they have the manufacturing base, and so there's a conversation surrounding the U.S. dollar right now. So, like the question is there going to be a collapse, a collapse of the currency or default of the currency, a hyperinflation of the currency, or is there going to be some third option to recapitalize or reback the U.S. dollar with gold, right? Which is what a lot of people are talking about, right? And the question there, like one of the parts of that conversation that surrounds that question is the US dollar going to stay on as the world reserve currency? Because one of the things that you have to do is you have to have deficits with everybody because you have to give everybody dollars so that they can do international transactions. And so there's talks happening at a very high level right now about exactly this question. Now, we don't know what's going to happen, but typically, because all of the other options are, very difficult and not very good to do for whatever the powers that be are, is that inflation of the currency or devaluing of the currency is the most likely one in the short term, which means more printing, more quantitative easing, and this might pump up the stock market a little bit more, but it's at a certain point, the currency becomes worthless. That's what hyperinflation is.
Carney wants to print trillions of more dollars for Canada. So given the fact, and Denny Boy, I think you're right there, silver is still highly undervalued. That means if it's still a good bargain to buy right now, but the more money they print, the more it's going to cost you to get the same amount of precious metals, and then it becomes less and less and less of a bargain. Comment here from Patricia: how much do you have to buy to deliver it to one's home? That depends on from New World Precious Metals is 5,000, but Gold Silver Bull.ca they'll send you, or Silver Gold Bull, they'll send you just a couple if that's what you're after.
Yeah. Like our minimum's $5,000. So if you want to go through us, we save you a little bit of money from the retail. But if you don't have that much money, you just want to buy a little bit of silver, like 10 ounces or something like that, or 5, even 1 ounce. If you can buy whatever you want, they'll send whatever amount to you directly. Now it'll cost you a little bit for shipping. I think it's like $20 for shipping or something like that. So if you're under a certain amount, you really want to maximize how much you're buying at the time, because it's going to cost you a little bit extra to get the delivery. Because that's the minimum for us is because of that free shipping. So everything above 5,000 is free shipping. Right. But even if it costs you extra, again, it's still cheaper than what it's going to be in the future. And you want to have something in your portfolio that is real, right? And of all of the things that could be real, this is the realest real thing that you can get.
Right. Denny boy, fractional silver selling. You didn't know that they did that? Yeah, you can buy these. They look like credit cards, and you can they're serrated, and you can literally break off little fractions of it as well.
Yeah, I've been meaning to get some actually. I'll pick some up the next time I do an order because like and to circle back to this, I'm intending to buy a whole bunch. So like the next purchase that I make, I'll buy some to show everybody. But they're literally like they're probably like this big, something like that, and they're just 1 gram of silver, and they're about 3.5 roughly ounces of silver in one of those sheets because they're 100 grams, like 28 grams in an ounce, right? And you pay a premium on top of that, so they're a little bit they're not as money efficient, but like if you want to trade somebody for like the value of like $5 or something, well, this is going to be $100 or something like that, rough value, right? So if this is going to be $100, you need something that's effectively a smaller amount of this, which is what the grams are for.
The current gold to silver ratio is approximately 84-1 to 85-1, meaning it takes about 85 ounces of silver to buy 1 ounce of gold. Correct. Arnie, you should a precious metals show.
And so this is actually important. So we actually broke the 80-1 level when silver hit 53 or $54 an ounce. So that gold silver ratio was coming down, right? And now we're back up to, like you said, 84, 85, whatever it is today, because gold settled back down at about 4,000, and we're sitting at just under 40, is like $48 or something for silver. So like that recalculation has effectively this is our new like floor. It feels like.
There were shortages in 2021 too. It's not forever.
Big difference is now, though, unfortunately, is that at that time there was nowhere near the amount of demand that there is now,
Right.
And this is the big difference, right? So 2021 there were shortages, and that was basically only institutional money and central banks and nation states buying. Now, where everybody's not hyper aware yet, but a lot more aware about this. So now, and it's really important to understand this, right? Only about 1% of people in the West hold gold and silver. It's a lot more in the East for a variety of reasons. But even if it doubles to 2%, that is literally millions of people trying to buy, 100 ounces or something. There literally isn't enough available right this second to do that.
Right. Diane says her silver guy says the mint is holding. We're holding back. I think she's meaning to say, and that's kind of what I've been hearing too, is that the suppliers are choking off the supply they've got. They're just not selling it. Is that just profit manipulation?
No, this is the breaking of the capital chain. So a couple of weeks ago, so the week of the Regina conference, this is what was happening that week effectively, and so the fallout of that was the week after that. So that was basically 2 weeks ago now. So 2 and 3 weeks ago is when all this stuff was happening, and effectively what happens, right, is you got to understand that there's every step in the process. So there's a mine, there's there's the name of not the mint, the refinery. So there's the mint. There's the mine, the refinery, the wholesaler, the distributor, the retailer, right? And there's a couple steps even in between those, right? So each one of those steps has to be able to make money. How do they make money? They make money on premiums or renting or leasing, and there's a whole bunch of capital chains for each one of those steps. So what happened effectively, now this is again a simplification, but just to make it for everybody easy for everybody to understand, is that somebody has to loan money at a certain rate for that process to make sense. So you basically go to the bank and say, hey, I've got a literal ton of gold here. I need whatever amount of money to buy this gold, because I got to buy it from the miner, let's say, right? So I take this gold, I give the money to the miner, let's say, and then I charge them a fee, and then I sell the gold at whatever the price is to the next phase, right? So your leasing cost, if you want, or like the loaning cost, is very short and it's very small, right? So we're talking, typically this is less than 1% of the total cost of the gold at that stage is what the leasing or the lending cost for that weight of metal is. So it's a very small proportion, but that went from 1% to like 30% overnight. because there's a whole bunch of capital chains that broke for a variety of reasons, which I can get into if you want. But the fact is that they're like, hey, I can't lend money for this because it's going to cost me too much money. I'm going to lose money on this, right? So they stopped minting until the lending comes back down and they can make money again, right? So the whole idea of capitalism really is that I do a thing, you do a thing, we do a thing together, and everybody has to make money so we all can survive. But there's a point when we charge too much for something. Well, it doesn't make sense to sell it at that price anymore. It's just like farmers, like, hey, my strawberry is only worth $20 right now. Well, that means I lose money. I have to sell them at $50 a ton or whatever the number is for it to make money. So I just hold on to them until I get what I need to get to make it profitable. Otherwise, I lose money. And so this is effectively what happened with the capital chains in precious metals market. Now, this is one of the reasons for this is, and this isn't confirmed, but what they think is that there's actually not enough metal, and there shouldn't be, because like Denny Boy was saying, there's like massive amounts of lending of fake ounces out there in the paper markets, right? So like, well, I want to stand for delivery. Give me all my silver. You're gonna have to wait a couple months, and then they're like scrambling in the background to like find all this stuff. There was even in the interview that I watched with Andy, he was saying that there was massive, insane lease rates from Shanghai. They're like, yeah, we're not going to send you shit, but we're going to send you this. But we'll charge you this rarely, so you get it back. And they're like, well, yeah, just send it to us, because they're just desperate. And like China actually said that they're not going to be exporting gold or silver anymore, and they're one of the biggest. They are the biggest producer of gold and the second or third biggest producer of silver. And so they're basically preparing for the destruction of the US dollar. And this is what's happened throughout history when, the new empire fights the old empire, while the empires have to fight. Well, one of the ways that you fight is through economic means. And when we were talking about the deals, right? One of the deals that happened, this is very important to understand, right? So the control of rare earth materials, so not precious metals, but rare earth materials that are used in manufacturing of all sorts of stuff. China basically said, they're like, hey, everybody that uses our material to a minimum of 0.1%. So basically, like, if you use our materials and your widget or doohickey or whatever that you make and sell is 0.1% our critical materials, then you have to apply for an export license from us. So this is like, even if my company is in Europe somewhere, and like I just need the baseline stuff to go into some other widget that I buy off another company in another country, they want the end of the retail product manufacturer to go to China and say, hey, I need an export license for this because it has some of your rare earth in my manufacturing process, which is ludicrous. So they basically tried to make a play, because they have a functional monopoly on rare earth materials, to say, hey, everybody on the planet now has to come to us and verify not only that you can get it, but you're going to have to hand over the schematics and everything. Basically, it's like, hey, give us all information about all the stuff that you make, regardless of what it is, just to get the materials to build it. And everybody is like, what the hell are you on, bro? That's not how this works. And so, but it is how this works, because they have a functional monopoly on those rare earth materials, which now, as I've been saying for years, the West really needs to break that dependence on China. But like, this was created like a decade ago. Like I've known about this for like 15 years. It's so stupid.
So now I got another comment here, and I think that I can actually do this, address this one, Sakbi. Mister, what was that coin that we should buy that Wayne was holding up? Now, here's the point that I want to make out of this. I've got two different coins here. This is a $5 coin, which has a currency value of $5, but it weighs exactly as much as this non-currency coin. That is this exact same 1 ounce of 0.99 pure silver. When you're buying currency coins or collectible coins, that kind of stuff, you're going to be paying more for lack of a better word, sentimental value than the actual value of it, because the value of it is in the weight, not what the coin is. So at this point, whether they call these a Victoria, a Britannia, or this from the Canadian Mint, and Elizabeth coin, doesn't really matter what the coin is. It's about the weight.
Yeah, exactly. So the way that I explain it to people is that
I'm
sorry. That was a massive
Nope,
delay.
go ahead.
So the way that I explain to people is that silver is silver is silver. However, again, it's perception, right? If you want to be like really 100% about it, just get the sovereign mints. It's basically the same price. There's no extra value to getting anything else unless you want other stuff. But like this is the only stuff that has like face value on it, right? So it's technically what's the word? Currency. Man, I can't think. I gotta stop drinking beer. Can mind fog now. I can't think of the word. Somebody can throw it in the chat. The term for sovereign currency, legal tender. It is legal tender. So like you only get $5 out of something that you paid $80 for, but it's still this is like it has real value in the eyes of the sovereign state. So one of the things that I want to share that's kind of going on in relation to all of this stuff that's happening with precious metals is the massive bubble in the market that they're talking about, which is the AI bubble. So I don't know if everybody saw this, but one of the reasons I want to share it is to make sure that everybody understands this. So one of the things that happened this week, I'm pretty sure it's this week, is that NVIDIA, our good friend NVIDIA, became a $5 trillion company. So it's first $5 trillion company. Now, why is this company $5 trillion? It's because all of the AI basically relies on their GPUs to fuel all of the LLMs and all of the AI stuff that's happening right now. So just to put this into perspective, this one company is now effectively the third largest GDP on the planet. Like China and the US economy are the only things that are bigger than this company. And it's all fueled by the AI companies just buying massive amounts of GPUs. Now, where this comes into a bubble is because these companies, there's like AMD, Intel, NVIDIA, OpenAI, Meta, Google, Amazon, a couple other ones. All these massive, huge tech companies, they're all signing deals with each other. They're investing in each other, and they're creating this circular demand for this product effectively, which is one of the things that pumps up bubbles, right? So this is effectively what happened in 2001, where there's like, oh, the internet's going to be the greatest thing. We're all going to make so much money. And then everything collapsed. And then the internet actually took off. And then all of the tech companies that used it, not the internet itself, right, is what actually benefited from this new technology, right? So they're really looking at something similar. But the thing to realize about this is like when I talked about the Magnificent Seven, of which NVIDIA is now one of them, the Magnificent Seven are now like 50% of the stock market, of the S&P 500, not the stock market, the S&P, like so the Fortune 500 companies, like these 7 companies are now like 50% of that index. So if these companies ever have a problem, so does your portfolio, because generally a lot of I'm really having trouble with words today. What's the word? Not the mutual funds. Jesus, the mutual funds that people are typically invested in are weighted as a percentage into companies based on the index. So if you're like, hey, my mutual fund, I want an aggressive one. I want to invest in the S&P. So okay, we'll invest in the S&P. Well, as a percentage of what they put into the S&P, they go into the companies of that. So if NVIDIA makes up like 20% or something, they might be weighted 20% into NVIDIA for accomplishing that index, or when you are weighted into the S&P 500, then put 20% of that or whatever the number is NVIDIA, because that's how much of the index itself that one company takes up. Hope that's clear. This isn't financial advice. I'm just saying this is how it works. And kind of one of the other big things happening right now is, if you remember, so this is subprime. Now think of that word. What does that word entail? What does that bring up for you when I say subprime? How do you feel about that word? What does that bring back for you?
Less than awesome.
Yeah. So I've known about this problem for a while, because when banks blew up in 2007, 2008, subprime mortgages were the problem with that. So people were losing their job, they couldn't pay their mortgages anymore, and a whole bunch of banks that were over leveraged collapsed. So what happened is Primalend and Tricolor are 2 private credit companies that were using private credit to effectively do bad loans. This is a very oversimplification for the interest of time, but effectively what was happening was the banks took a whole bunch of money, they shoved it in what we call shadow banking or private lenders that didn't have the same level of oversight, and then they levered up all of these different companies that were absolutely atrocious. Let me see if I can find the other one here. Here's an example. So factoring firm. So factoring is a type of lending where you basically take let's say I've got a deal from Google. Okay, so Google sends me a deal. They're like, hey, we'll give you $1 million. Go build some widgets for us or whatever. So then you take your contract that you have with Google and you say, hey, bank, I need a bunch of money so I can actually fulfill this order because my little factory here in Timbuktu in the middle of nowhere can't provide all of these widgets. But if you give me some of the money that I require, and this is the collateral, this contract that I have is the collateral, I then use this money to build the factory, to deliver the contract that I got from Google. Is effectively how factoring works, right? So you have a contract, you capitalize it, you use the money, and then you pay back the loan that you got from the factoring company to do this, right? So that's what a factoring is. So factoring firm affiliate files Chapter 11 bankruptcy. Estimated total liabilities, $500 million to $1 billion. Estimated total assets, 50,000. Now you might question, how is that possible that these guys have this much money and they got this much loan with literally no assets? Great question. And so, which leads us to Jamie Dimon, our good friend, buddy boy over at JP Morgan. So he is now talking about a banking crisis similar to 2007 because of all this subprime nonsense on all the lending. And so he said, when there's one cockroach, there's probably more. And he was referring to this situation that happened last week, I think. This story broke. Yeah, it was last week. That there's probably more like this because of the lending practices of the private capital markets. And so this is a potential contagion that could just go. It could be another 2008 trigger. It could be one of the black swan events because there's a bunch of banks that are over leveraged because of real estate, because of the war, because of all the different things that are happening. Like there's all sorts of different stuff happening, right? And so this again is one of the probable reasons why there's so much happening in precious metals, because they have to take positions to cover their lending, right? Because that's what banks do. That's how they make money, right? And if some of those loans go bad, they want to have assets so they can pay it off. Because one of the reasons that SVB collapsed last year, 2 years ago now, is that they didn't have enough capital that was available to deal with the losses that they were suffering because whatever they were suffering for. So they had to sell a whole bunch of treasuries and bonds at a loss because of the increase in the price. The interest rates. So they couldn't sell them at the face value. So they lost literally billions of dollars and would collapse the banks. That bank. Good times, I know.
Well, we have got a shit. We got a shit ton of comments here, so and we're down to about 10 minutes left. So we want to speed answer through some of these here. Arnie says high ratio equals potential silver upside. Analysts believe silver may outperform gold in the coming months if the ratio reverts to historical norms. I think we've talked about that quite a bit, about the upside potential of silver because of the high ratio. This one here, I think, is going to be a factor here in Canada. We covered this last night, Bryce, down in Richmond, where banks are refusing to renew mortgages if they're in the zone that the Indians are claiming the lands on. This is now happening in Quebec. It's going to be happening all over the damn country. What does this do to everything, in your opinion? I think, why would they ask me that? I have no idea as to why they would do that. But
so there's this word in banking called net operating profit or net profit margin, NPM, net profit margin. So prime, right? Like, so the prime central bank rate, let's call it 4%, what a 2 point whatever percent it is right now. So whatever that rate is that's what the bank get charged for lending money. So if they have a bunch of money that they printed out of thin air, but they have this, and now they have this money in their control, now they want to lend it out, right? So if they lend it to you at 4%, they make that delta, that difference between what they charge or what they pay and what they charge you, right? And so what that probably means is they're looking for more ways to get more money and cash flow into the banks, because there's huge amounts of money that are leaving Canada because, well, obvious reasons, and they need more cash flow probably. And so like I don't want to get too deep into it, but I've had a couple clients have some real problem with some of the banks recently. Not to name names or anything, but like we're really seeing a lot of consolidation, collateralization, financialization of the banking sector. And so this is a very it's a time to be alive right now, let's say. And I think the important part is the important thing to consider is you want to have enough money in your portfolio to be able to pay your debts, hopefully, and have money in gold and silver to be protected so that, you know, when gold and silver eventually skyrocket in price to where I think they're going to be, this is why I'm holding on to my own, is that you can pay off some of this debt and be, you know, free and clear.
In this comment from Carly here, I think that this is kind of something that I think that some of the elites are playing with their, as you were saying earlier, they want to crush the American dollar, and if but they're building themselves an escape plan using crypto, and for those of us that, you know, the peons of the world, we're going to get crushed if that happens, and it's going to be even worse if you're not holding any kind of precious metals. Am I incorrect or correct on that?
Throughout history, the only thing that's a guarantee is precious metals and what you have on hand. When things go sideways, as good or bad as they're going to go, it doesn't really matter. You want the guarantee of something physical, right? That's what it's a guarantee that I have value in my hand, right? If I give you the value, you guarantee that you give me the thing that I pay for, right? And all of the currencies that we've ever had, they've all gone to zero, right? There's no reason that ours won't go to zero. Exactly. Like 100% of them, except the ones that are alive right now, have gone to zero, right? And so if they're intending to change things, you want to be in a position where you have the option to do what you need to do, right? Gold and silver is one of the few things that everybody has access to that's universal. And for that reason, it's really important. This is one of the reasons why it skyrocketed so much, because the wealthy, the nation states, the central banks, they're all positioning themselves so they have assets. What do rich people do? They get assets, because assets pay them, right? If you have to, you know, pay somebody else for, you know, rent or whatever, you're not paying into an asset, right? Now, mortgages can also be seen as kind of a trap for that reason, because you're paying into something you don't really own. But if you rent that out, now it's an asset because it's producing income for you, right? And so whenever you're looking at all of these different situations, you have to ask yourself, what is happening and why is it happening, right? And how is it happening, right? That what and how is the more important part there, because it doesn't really matter as much why if you can understand what and how, right? I don't really understand all of the mechanics that are happening in the background. Like the level of stuff that is the complexity of some of this stuff is even beyond my pay grade in some instances as well. That's why I listen to experts too. But the important thing that we can all see very obviously is if you're doing something and everybody else around you that knows everything there is to know about the system is doing the same thing, well, there must be a damn reason that they're doing it. It must be a good damn reason too.
Jason's got a comment here. Troy ounces is 31 grams, not 28. Like we used to buy our stashes in. 28 grams is not the same as Troy ounces.
That's why I said here like 3 and so it's like 3 and a bit ounces of silver in the 100-gram thing.
Michelle, I believe you can get gold in grams as well. As a matter of fact, yes, you can. That is the only gold that I own, but that is a 2.5 gram gold piece.
So that's about $500.
Yeah, about $500 was, I think, about $280 or $300 when I got it 2 years ago. So yeah, you can get small denominations of it. All right. Bryce, is it better to put your Bullion coins in protective holders to preserve their condition, i.e. uncirculated, extra fine, etc., like collector coins?
I mean, you can. I don't, because it's still silver. But I'll show you the difference, actually, because like I have one that I keep on me all the time, just in case, and then I have one that doesn't go anywhere, right? So I'll show you the difference if you can see this.
You can see what happens there. I got a fresh one in this hand and one that's got, you know, staining on it. But guess what? It means it's worth exactly the same amount, unless your coins. That's the difference. And buyers and retailers, they don't want collector coins. Because they lose money on them, because people they're only interested in their weight value. Carly, I agree. I am over charges because of bells and whistles. This is one of the things that used to trigger me. You go to the post office and they'd have a one there that they wanted $99 for because it had some pretty freaking thing on top of it when you're getting $35 worth of silver at the time, and they're charging you $100 for the crap, right? That's on it. Weight and purity. U.S. silver coins are approximately 90% silver. There's a difference between circulating currency and their contents, and I don't think that they have to stamp on the content on them. But I know that all of these ones from here in Canada, they all have the 99.99 numbers on them, so you can see it.
Yeah, there's American Eagles that are 1 ounce American Eagles. That's their effective the same thing as our Maple Leafs. But I think you're referring to what U.S. coins used to be. Like prior, it was 1963 or 1967, one of those somewhere in there. That the U.S. stopped using silver in their coins. But so everything before that had silver, and I think that was what you was referring to. And if not, that's what it was.
Right. The government has paper. The citizens are wise. Cash out at banks. That's kind of why we've been doing this for a long time, because that paper money was predictable that at some point with the liberal government that we have, that it's going to be worth wallpaper. And this, it doesn't matter whether I bought it at $30 or $50, is still going to be worth more than 100 paper dollars real soon.
Exactly. Yeah, we're almost there actually. When the price hit 54 US, I think it crested up to 80, 84, $85 or something like that for retail. So that's with the premiums on top of it. But that's effectively how much you need to spend to pick up one of these. And 2 years ago, that was $35. And it was like, oh, wow, it's super expensive. And I was like, not really.
Jima, what would happen if people all sold their homes before they're given to the natives? It's impossible. The banks wouldn't be able to do it. The values wouldn't be there. People would go. Most people are upside down on their mortgages at this time right now. They borrowed, young people especially. They borrowed money to buy a house that was at the price that was twice of what the place was worth. The market is coming apart. The banks are foreclosing. They can't get rid of the properties that they have already that have more debt than value to them. So this is the tailspin that Canada is in, and America is trying to avoid, actually.
Yeah, and so just to put a bow on that, so we're actually to that question specifically about what would happen if everybody sold their house at the same time. Well, we're about to find out, because that's pretty much happening now. It's not happening yet. I think it'll really start to happen next year when everybody has to refinance, and especially when all of those people in Richmond have to refinance, whenever that is, because a lot of people just in general have to refinance next year. It's like 40% or 50% or something of Canadians that own a property have to refinance next year. Some absurd number. But anyways, like we're see what that actually looks like, and basically what it looks like in China, because this is happening there already, is that you can't sell anything because nobody's going to buy. There's this old saying that says, don't catch a falling knife, or don't catch a
falling knife. Yeah,
exactly. And so what that means is referring to the stock market, where like you're not trying to sell. You're not trying to buy where everything's collapsing. And this, and like I was saying before at the outset of this, trajectory and momentum, right? If you have a whole bunch of downward trajectory and a whole bunch of momentum behind it, nobody is going to be buying into a market where if you buy it today, it's going to be worth less tomorrow. Like, just doesn't happen, right? And that's what's called deflation as well. That's one of the things that causes deflation, is the falling prices of everything. But if you're talking specifically about property, right? At a certain point, there's like, okay, well, that's a good deal. I don't care that it's going to be worth less. I'm going to be worth less because that's what I want, right? No, maybe we'll hit that eventually, right? But we don't know how low it's going to go, because you have some people that have owned this property since they bought it when it was like $50,000 or something. They can go really far before they're like, oh, I'm still ahead. Whereas other people are like, well, I bought this at $500,000. Like, I can't go anywhere near that. So there's a lot of people that are going to have to hold on to that potentially, or there's going to be foreclosed on if they can't afford the payments. It's going to be crazy. So that's kind of the point that I'm making with this is if a whole bunch of people have to sell, which a lot of people do because they're underwater, they got it as an investment, and if they can't sell it and they can't afford it, well, that means it's a foreclosure, and then the bank has to sell it, and then the bank is basically doing like fire sales, which drops all the property prices. And if nobody's buying, well, maybe BlackRock's buying.
I was covering some of that in different regions of the country a couple of weeks ago, where Niagara Falls or Niagara region, where all of the new developments are all basically now all foreclosed, and the bank trying to sell them and can't even give the damn things away, and the banks are in trouble here right now too. In a big way. And what are they going to do here now with the new Indian problem, with all of the properties in our country is built on a Ponzi scheme of GDP that's based on housing. So exactly what we've been saying for 2 years here now, Bryce. The insanity was unsustainable, and at some point it was going to come apart. Comment here from Denny Boyle on my retirement goals, American Eagles. I kind of got Brett a little bit with that traveling story on the weekend. If you have a $50 gold coin and you announce that you've got $50 in currency to go across the border, you're probably carrying several $1,000s in that coin, but $10,000 worth of buffaloes is $250,000 in exchange cash, but nobody's going to tell you that you could or should do that if they're in the financial industry. Okay. Pristine condition makes it easier to sell to the banks if you have to, but I don't know that banks actually buy back precious metals, do they? I don't think that they do. I've never actually.
No. Not to my knowledge, unless you're keeping it with them. But even then, I don't know. I know that they sell in some cases. Yeah, I know that they sell in some cases, but I don't think they buy back. So normally you have to go to direct sale with somebody else or to a bullion dealer, and they'll charge you about 10% typically. So if you sign up with us, we only charge you 3 to 5%.
Right. And that's, as Tom says here, that makes it easier to sell again to someone else than the scratched or damaged or nasty coins, because they're just going to turn around, flip it anyway, or melt it down in terms of units into it.
Yeah. So in that respect, yeah, it's better to keep them. But like, you're not like, unless you're like, flipping around with it like I am always, you're not really using this. Like the one that's like kind of banged up a little bit is sitting in my wallet. Like I'm not really intending to sell that ever. Like, and hopefully I never have to use it for a transaction either. But in the case that I do, I will. And it's like, would you want the silver or not? Are you going to sell the thing that you have, or are you just going to pout about it? Like, oh, yeah, it's scratched up a little bit. It's still silver and still an ounce.
Yeah. Denny Boy, bullion holds value, but that doesn't mean that it won't have more purchasing power. In an economic downturn, the value of precious metals inflates. So the worse the economic situation, the better.
Well, and this is the thing about.
You want to touch that?
Yeah, well, this is the example of the declining dollar that we're measuring it in, right? So the inflation of the metal doesn't change. Like there isn't more weight there after you buy it; it stays the same. But the value that you can get with it, again, is you're measuring how much you can get with that gold, right? You're measuring how much you can get with that silver. Now that might inflate because you can get more, because people are saying this silver is now worth more compared to what it was before, because how we're measuring the silver is now there's more dollars that it takes to get that silver, right? So we think of this through a lens of dollars, right? That's why we're saying that the value is going up, because we're measuring it in dollars.
Denny Boy says the heat pumps will save us.
Hallelujah! Finally, a solution to all of our problems.
Would American banks be a safer option?
No, and like the American banks are integrated with literally the entire planet. Like the SWIFT system comes from banks. So if there's a problem in that system, and it's these banks that are like shoveling money into the shadow banks or the shadow banking area, No, it's all connected. You know, like there's that old joke. You know, the elbow bone's connected to the wrist bone's connected to the tailbone, and you know it's all connected, right? It's all the same body, right? This is an appendage of banking, right? And the only thing that's separate from that is the system that the Chinese are building with the BRICS exchange, which is why
So
this is probably going to be the exchange that comes after it.
if the Canadian dollar fails, the US dollar doesn't, but you've got your money in a US bank and it's registered there as US currency, does that save your bacon?
In that respect, yes. So there's a couple different things there. So if the Canadian currency collapses, that's different than the Canadian banks collapsing, right? So the currency could still be fine, but the
Right.
specific bank might collapse. Those are two different things. Although they're connected at that
Right.
level too.
Marlene says, so if you own your home free and clear, is it wise to hold it? I would say yes.
Yeah, I would.
That-
This is something that's important, right? You're gonna have to plan your
This
flight.
this is exactly why. In my area, we have a lot of homes for sale. Some of them are on the market up to 4 months, and the prices are lower than what people paid for them.
Yeah, I've been hearing that a lot, and this is my point, right? This is like one of the big risks of how our economy has been managed for the last little while is that the economic these policies have an effect. Like, and I gotta do a little bit of reminiscing here. Like for the last 10, 15 years, because I've lived in Vancouver, like there has been nonstop investment in real estate because it goes nothing but up, 5% a year, 10% a year. I had a friend, he bought a condo for $250,000. He renovated it, put new floors in it, and painted it. He sold it for $400,000 the next year. Like that is insane, and it's not sustainable, right? And now we've hit the peak, and now we're on the decline.
That's exactly like the comment here from Hamburger Helper. $200,000 house is now valued at 700,000, which is criminal, and people were actually going into debt to get themselves into that $700,000 house, and now they are going to lose their house and come out of it with $400,000 in debt when the housing market collapses.
If they can't hold on to it, yeah. I mean, this is the key point, and this is why I say your biggest asset is you making money, right? If you can't make money, your biggest asset's gone. Your second biggest asset is usually your savings, and your third biggest is usually if you own it at all. And so my friend that did that flip of that condo, he went and bought some years ago. I think he bought in I want to say 2020, 2019, something like that. So a number of years ago now, he bought a condo downtown Vancouver for $850,000, and it was basically like 1.5 bedrooms for $850,000. Like he could see, Vancouver Arena from Rogers Arena from his window. Yay, you, I guess, but almost $1 billion for a condo, bro. Insane.
Yeah. So Dave Bellick, London bullion market is out of physical silver, so the paper silver market is desperate for bullion. Another thing is India now is taking silver as collateral on loans.
Like I said, we're recapitalizing and refinancializing precious metals. This is why you want some. At a certain point, the bank may say, hey, they might put up a sign and say, hey, put your silver in with us and we'll give you a return on that. We'll just pay you for holding it here so we can have capital on our balance sheet. They might do that. We don't know how crazy this is going to go, but I guarantee you it is going to get crazier from here.
Well, that really doesn't surprise me because a lot of people, they don't necessarily think right away that the I in BRICS is for India. So going back to commodities is always been a part of the plan for those BRICS nations. So
well, yeah, and it's what's real.
Yeah.
Like at a certain point, oh, you're going to give me some paper. Cool. What does that do for me? Well, you can go buy other stuff with it. So why don't I just buy the stuff with it then directly? Why don't I use your paper? That's the logic, right? And so at the end of the day, and we're so mineral and resource rich here that if we were doing the same thing, if we were doing this exact same thing that BRICS is doing, we would be ungodly amounts of wealth that we would have, man. It's crazy, bro. And we've got so many problems. We're nowhere near getting that.
Well, we managed to scream through most of the good questions and whatnot, and we're only 10 minutes over. So, yeah, wow. That is fast and furious. Final thoughts before we head over for tonight, Bryce?
Can we take another couple minutes? I just wanted to show this video for a little bit. So this put it to about 21 minutes, 1 hour and 21 minutes. It's right near the end there. And put it at like 1.25. These guys talk slow.
Push play.
Oh, I'm sharing. I don't think. Oh, hold on. I think I have to share the. Can I share with audio? Is that share audio? Oh, here we go. Yeah, I got it. All right, here we go. Okay, try again. Okay, can you hear this?
And again, I don't like to use the term recommend, but give us a little bit of insight on how you would approach this environment as an investor. And again, this is not financial advice.
I would just simply say that in this environment, if you don't own assets, you're dead. You need to own assets. Whatever those assets are to you, you need to own them, because assets have been going up in the face of a falling dollar. To me, gold and silver are the preferred assets, not because I own a precious metals company, but because I see them as being reintegrated and have been blurred. Their true value have been blurred because of this Keynesian-based system for a long time. But when you see the most knowledgeable investors in the world, the central banks, as I've said, for 5 years, 6 years now, accumulating it at the pace they have, it tells a different story. When you see the deliveries into COMEX, which would be the most sophisticated institutional traders in the world doing this, and whoever is behind it, well, you got to stand up and take notice. But when you see Jeffrey Gundlach, the bond king, Michael Hartnett, the high-paid, highfalutin, big-time analyst at Bank of America with his $10,000 a year plus whatever it is newsletter, very expensive, or the CIO at Morgan Stanley, or the chief financial officer at Jefferies, or Goldman Sachs saying if the Fed loses independence, you'll see $5,000 gold right away. Well, there is no independence with Stephen Mirren there now, and Bo Hines at Tether. I keep Jamie Dimon saying for the first time in his career, owning some gold is a good idea. I mean, all of these things, none of them have ever happened. And I think they're giving you crumbs, whether you choose to follow the path and connect those crumbs, connect those dots into a linear progression of something bigger. That's your choice. I choose to see it as a warning sign that has little by little by little gotten bigger and bigger and bigger. And when I was talking to you about this 3-4 years ago, I don't know how many times, what has gold done since then? Doubled, tripled, silver, doubled, tripled? I don't know. I'm not sure. But all I can tell you is that the slow moving acceleration has gone unnoticed by the people in this country. And now all of a sudden they notice it because it's reached a high level. And they really notice it when it gets the snot pounded out of it, because you really didn't see too much other than kickers. Yeah, gold's reaching, gold's going higher, gold's going higher. But you sure hear a lot about it when it gets hammered in the middle of the night and it's over and it's reached its peak, and move on, keep looking elsewhere. Yet at the same time, we're being told that the deliveries in the month of October could be the highest ever. Doesn't make sense, does it? So the point of it is that price and the misdirection of price is the greatest tool. The ability to misdirect price is the greatest tool of manipulation, because most people, unlike you, who are the most prepared commentator in this space, always have been, do not have the energy or the wherewithal or the desire to dig deep under the surface and push back against the narrative. You do. I've always respected you for that. You know that. Even in our personal conversations, you'll say, well, you know me, I have to play devil's advocate. But that's a
So the thing that I wanted to show with this is that there is, and this is Andy Scheckman for anybody that's not sure. So this is one of the primary people that I follow, because he owns a massive gold and silver delivery company in the U.S. and is very well connected to the very important people in the industry. So next week I'm going to show another video similar to this with Rick Rule, to kind of go over some of the other points about this. But the things that he's saying there, right? He is basically saying, in effect, the richest, most well information people, most highly connected, closest to the how the system functions, are all doing this one thing. It doesn't matter what the price is. It just doesn't. It doesn't matter what the price is right now, because the trajectory and the momentum have basically proven for the last 25 years, roughly, that this is the best performing asset with very little risk that you need in your portfolio. Right. This is what he's effectively saying through this interview, and I shared the link with you, Wayne, to share with this for everybody, because this interview goes into some of the stuff that I was talking about today, and I highly recommend, if you really want to learn more about what's coming down the pipeline, follow Andy Scheckman. If you want to learn about the mechanics of what's happening and how it happens, follow Rick Rule. But these two people are two of the best examples that I can give of, they know what's coming. They can see all of the results of these policies, and they are preparing themselves. And as many as people will listen, just like I am, for, hey, you got to be prepared to protect your family.
Well, I don't usually do this in midstream, but I am dropping that link to what we were just watching there in all of the chats for everybody. So you don't have to wait for a Substack. Go and copy this link out of the chat wherever you're watching this from right now and bookmark it, watch it later, whatever the case might be, because this is exactly it's days like today, Bryce, that whatever it was, a year and a half, 2 years ago, that I said, Bryce, we need to do this because this is coming. And
Yeah.
and that's kind of what he was referring to there too.
Yeah.
We slow boiled on this shit, where to the point where now it's becoming a crisis. Now it's becoming a panic situation, and nobody in this community can say they didn't know, they weren't informed. So that doesn't mean they could afford, but we've also always said that find other assets, and that's what it's about. It's about assets. What are people going to want when shit goes sideways? Whether it's food, fuel, skills, knowledge, or precious metals, yeah, the currencies collapse. A can of tuna in 1930 Germany was worth 50 pounds of currency, like 50 literal pounds. You could take a wheelbarrow full of money, 50 pounds of paper, it wouldn't get you a loaf of bread or a pound of butter, right? So commodities, that's the number one thing that I think people, whatever is within your reach, your grasp, your ability, get your hands on it and do so, sooner than later. In is my thought. So yeah, wow, another banger, brother.
From the fire hose, my friend. So I hope everybody has a wonderful Halloween. Don't let the doom and gloom of the world get to you too much. Still spend time with your family. It's really important that you build the connections with the people around you, and never give up and never surrender. So hope everybody has a great weekend, and I'll see you next week.
Amen. All right, thank you, Bryce. And he's right. The sun is still going to come up tomorrow, and it's only going to be catastrophe if people aren't really prepared, right? And this is what I've been trying to do to help everybody out for so long, is to take the sting and the bite out of it coming, because insanity is unsustainable. So is bound to happen. It's inevitable, right? So yeah, but before we run here, I'm going to do something I've never done this before, so I hope it's going to work. I'm going to take my phone, I'm going to show you guys. I've got my camera turned on, and what I'm going to do is up at the top screen of the picture here, there it is. Oh, there we are. Okay, take a picture. And what happens is it shows up, open it up on your camera, and it opens up. You click the button and it will come up. Info at New World Precious Metals. My phone is real slow. The internet is glitchy here today, but it will eventually open up to the page where you can book an appointment to talk to Bryce. There's no cost to talk to Bryce. Book an appointment, talk to him directly. We do the best we can here in this environment of doing a program. But if you have concerns, questions, queries, 100% talk to Bryce. He'll be straight up with you 100% of the time. So that, ladies and gentlemen, boys and girls, hey, oh, I'm glad to see that, Charlie. I just took a picture of that, and it worked. Thank you for that. Exactly. It's so much easier than pumping out links across the chat. That was why I wanted to do that. People are, the water is getting hot. People want to get out. So, glad to know it works. So thank you guys all for tuning in here tonight. Stay mighty, stay blessed. Tomorrow night, Saturday night, I'm going to be on the Jason Levine show at 9 p.m. Eastern. We're going to be talking about all things corruption. and Kearney in Canada. So if you, I'll try and find a link to that ahead of times. I'm not sure where I'll be able to share it out. I'll be able to share it out on Facebook and X, a couple of those kinds of things. Or I'll see if I can get a recording for you guys and share it to you guys sometime next week. But that, ladies and gentlemen, boys and girls, grannies, gators, friends, family, prisoners, patriots, and hostages too, is everything that I've got for you guys tonight. Stay mighty, stay blessed, and Lord willing, we'll be back again 7 p.m. Eastern on Monday. Have an amazing weekend. Aloha. I see you.
In times of global instability, soaring inflation, and massive debt, gold and silver have proven to be unshakable pillars of wealth. New World Precious Metals, based in Calgary, Canada, is a leading international brokerage. We offer an easy, secure, and cost-effective platform for investing in gold and silver, including our international wholesale program and registered retirement savings accounts. Protect your money outside traditional banking with our physical precious metals, privately vaulted outside the banking system, at secure, insured exchanges worldwide. Gold and silver have been trusted assets for generations, with current projections indicating high returns. And with unprecedented demand from governments, banks, and investors, there are now shortages. Precious metals thrive during inflation, geopolitical instability, and currency devaluation. Sound familiar? Now is the time to invest in gold and silver, whether in your international investment account or by transferring registered retirement savings accounts. Experience the security of physical precious metals, combining the safety of physical assets with the flexibility of being like your own bank, offering instant liquidity and a financed line of credit. With precious metals on the rise, don't miss this generational opportunity to protect your wealth. At New World Precious Metals, we ensure your wealth meets its potential. Contact us today and our personal brokers will guide you every step of the way.